Micron Technologies is actually one of the most requested stocks on the channel. I can't tell how many times I have been asked to actually review the stock, mainly because many super investors have actually been buying it, people like Monish Pabrai, people like Lilu, and many other successful and very big and popular investors. So there must be some value in Micron. And Micron is actually down around 47% year to date. It's around $50 per share, pretty much the same price it traded at around July of 2020 and a little bit actually in 2019. Now, the main reason I was reluctant on reviewing Micron and AMD and most of the semi type of stocks is this is an industry that I'm not very familiar with. I have never personally invested in a semi stock. I know it sounds crazy, but I like to stick to the rule of actually investing in what I understand. And my knowledge doesn't really go through a lot of high tech type of stuff or really understanding the supply demand dynamics of something like Micron or all the other semi stocks, so I stayed away from it. But I have to admit that Micron was so interesting to me that I actually took some time to look in a little bit deeper into the valuation to determine a pretty fair buy price for Micron, as I'm personally interested in buying Micron in my portfolio mainly as a bet on a recovery, because now we're going through the 2023 global recession. After that, we're going to have a healthy recovery just like we always have, and this is the best time to be positioned in those cyclical stocks, like many of the hotel stocks, like some of the restaurant stocks, like some of the CarMax and other cars type of businesses. This is when you buy them, whenever nobody wants them, whenever the tide is against them, whenever, pretty much nobody likes them, just before a new bull market or a new expansion after the contractions that we already had. So this will be my analysis on Micron, and again, I hope you enjoy this video. Now, most of you are familiar with Micron. They specialize into the memory chips like the DRAM, which make up 69% of the revenue, and then they have NAND, which is around 27% of the revenue. But needless to say, the quarter was an absolute disaster for the company, and many people try to claim that this is not a cyclical business anymore, that it's more stable than it used to be before. Why? Because of all the demands that we have, which exceeds a lot of the supply. And this has been proven wrong again and again and again. And we can see the company's revenue, which was around $7.6 billion in fiscal Q1 of 2022. Now, going forward to 2023, it's only $4 billion. That's a pretty big drop, and you can see the trend. But this trend doesn't really worry me as we're going into a global recession, and this is just the way it is, and the price has corrected to reflect those trends. But my issue is with the business model of Micron itself. So in Q4 of 2022, they made $6.6 billion, and their operating expenses were around $1.1 billion. Now, they made around $2.5 billion less this quarter, and their expenses are pretty much the same. Now, they made less money on revenue. Why would their operating expenses be the same? And this, look at me that it's not a capital efficient business, it's a capital heavy business, and it has a lot of things around labor inflation, cost inflation with commodities, and many other things. Now, this is not new to you, but as a person that's never invested in semiconductors, I personally don't really like such business model. Yes, you have better business models like AMD and stuff, but Micron specifically doesn't have a good business model in my opinion. And again, we can see it here in the revenue and the cost of goods sold, which is a better metric. We can see that in December of 2021, they made $7.6 billion, and it cost them around $4.1 billion. Now, in September of Q4 of 2022, they made around $1 billion less, but their expenses only went down $100 million. And now they made around $2.5 billion less, and their expenses only went down like $800 million. So we can see that they are spending a lot of money to make money, and now actually Micron is even losing on net income. It's a losing company. It's not really making money in this environment, and their guidance is not encouraging at all, as they are still expecting pretty much a very wide wide range of EPS, and they will likely lose money again going into 2023. But we don't really care about that stuff. As Micron has a good balance sheet, it's not going to zero. All we care about is when is the best time to buy Micron. Because many people are going to claim this is a long-term investment, you hold it for 25, 30 years, and then you dollar cost average in. No. To me, this is a cyclical investment, just like an oil stock, just like a commodity type of stock. Timing is key. You have to buy it before the expansion starts, and you have to sell it before the contraction starts. And this has proven to be true time and time again with stocks like Micron. All right. Now, Micron is, again, pretty amazing company in my opinion, but it's not really as cheap as people think, and especially if you look at their forward earnings, which is what the analysts are expecting, and those earnings are likely going to be much worse than the analysts are expecting. But in this metric, I'm just looking at the enterprise value to EBITDA the next 12 months, which in line with analyst expectations, and I believe they're going to be revised even lower. But now it's trading pretty close to 9 times enterprise value to EBITDA on forward earnings, not on current earnings, on forward earnings. And this is one of the highest metrics that Micron has ever traded for, in my opinion, which really shows that Micron is not really as cheap as we all imagine, and it will likely get worse before it gets better with Micron, in my opinion. Now, again, it's a pretty amazing company. They have been taking advantage of those, silly prices to do some share buybacks. They have started a dividend in 2021, which I believe is a big mistake. I think it would have been better if they stuck with buybacks, but this is what the management did, and it's a pretty good company in general. Now, I tried to look at other metrics to try to find some type of a bottom or some type of a historical signal that tell me whenever Micron trades in this valuation range, this has been historically the best time to buy Micron. And I did find a couple of metrics, although they are not the best. But this is the last 12 months enterprise value to EBITDA, which makes Micron look, again, very cheap. But this is because those are the peak of the cycle. We had the last 12 months. But the next 12 months, again, it's one of the highest ever, which is why many people are getting fooled by Micron, not just now, but mainly before it actually went down that much. They were buying in, looking at the last 12 months, while the next 12 months into a global recession can actually be very, very different. All right, but Micron did put their guidance lower, which is going to help, price it in the stock. But looking at the last 12 months enterprise value to EBITDA, it's only sitting at 3.7 times. And if you look at this chart, I mean, it couldn't be more perfect. You could see how it's a boom and bust, a boom and bust. It's not a long-term investment. It's not a 50-year stock. It's a boom and bust, in my opinion. And you buy before the boom starts, and you sell before the bust actually begins. And it's not called timing the market. This is just the nature of this investment, in my opinion. Now, you can argue that, yes, maybe now it's a longer term, as the United States is trying to be better in chips and investing domestically. This is a good argument, but this is not what I'm trying to do. But again, this chart is showing that Micron historically is pretty close to some type of a bottom, but it's not very accurate, as before it traded as low as 1 time enterprise value to EBITDA, and it's now around 3.7 times. So again, it's not very, very accurate. But the main 2 things I'm looking for to actually buy Micron for my personal portfolio, and this is the first one, is the price to tangible book value per share. And this essentially takes the tangible book value, meaning you take all the entire assets minus the liabilities, and then you take out all the intangibles, you take out all the goodwill and anything that you pretty much can't sell. All right, and it's mainly the property, plants, and equipments, and pretty much the liquidation value of the company. And now this company is trading at 1.15 times the book, which is very cheap in my opinion, as it historically traded around 1.7 time book. But you have to keep in mind that this company traded as low as 0.5 time book, pretty much 50 cents on the dollar, and this was mainly in 2008, and I don't believe we're going to have the same thing again. So for a signal for me to buy Micron, I want to buy it below liquidation value. This to me would show, and it has showed before, as you can see this line, below 1 time book, even at 90 basis points, on the book value or tangible book value per share. If it goes under 1, meaning if you take all the assets minus liabilities, you take out the goodwill, if it's trading below tangible book value per per share, that would signal to me a good buying opportunity, and I would feel better for me to try to time in some type of a bottom into buying Micron. Now, something else, I'm looking at an evaluation model, and again, I don't normally value stocks this way, but Micron is a semiconductor and it's a cyclical type of industry, so I'm using different metrics to try to value this thing, as I don't believe you can just use a DCF with valuing, an oil stock and then use it to value Costco and then use it to value a gold miner. I think people make a big mistake trying to value all stocks the same way, while each and every business is a completely different, in my personal opinion. But this is the analyst estimates for Micron. They're expecting the company to lose around $2 billion in 2023. And I believe this is fair, and this will be the worst year for pretty much everything that's cyclical. But again, this is also the best time to actually buy such companies, in my opinion. And they expect a recovery in 2024. Now, looking just at the EBITDA estimates of the analysts, they expect around $19 billion of EBITDA 5 years from now in 2027. So they expect a big recovery and more production as we have more demands for memory chips and stuff like that. But this is a pretty big, increase from 16.8 billion, and it's going to go back all the way to 19 billion. Now, I'm not using 19 billion as my valuation model, as I want to play it safe, and I don't believe that Micron maybe cannot get to 19 billion. Maybe it could get more than 19 billion. But I want to play it safe that Micron can just get back to where it was in 2022, which had around 16.8 billion of EBITDA. And the company traded historically around 6.5 times enterprise value to EBITDA. So if I take my calculator and actually put in 16.8 billion, and I times that by 6.5 times of enterprise value to EBITDA multiple, I get around $109 billion of enterprise value. Now, the enterprise value for the company is around $53 billion. We got around $109 billion. So this is around a 2x for Micron over the next 5 years from today's prices. But again, if I want a margin of safety for me to try to time some type of a bottom or some type of a signal that would show me this is the best time to buy Micron, I'm looking to buy it below liquidation values. That would be amazing, which would be below the price of tangible book value per share of below 1, maybe around 90 or around 80 basis points, 90 basis points is a good entry point for me, and the valuation and the upside scenario would be looking much better if Micron was able to get back to 16.8 billion. So looking at those two metrics, Micron does look like a buy at those prices. But for me personally, as I am the patient investor, I am not in rush to go and buy Micron going into a 2023 global recession. And I'm very, happy. I'm not going to be mad if I miss the bottom, as I have discipline and I know I will always find opportunities. So if Micron does trade below 1 time of tangible book value per share, and if my valuations and all the stars line up and Micron maybe get around $40 per share, this is when that would happen. This is when I would be looking to buy into the stock. If we don't get low 40s, $42, $43 or $40 per share, then I'm not going to be buying Micron, and maybe I miss the bottom. But again, I'm okay with that, as I can always find plenty of opportunities and as all stocks are going down. So this is my video for today. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.